everyone. Okay, so today I'm going to go ahead and introduce you to this stock. It's FORM. We're going to go ahead and analyze it first through fundamental analysis. Then we're going to go ahead and analyze it through technical analysis, and and then price manipulation, and lastly, it's going to be options. What's the best one for it? All right, so here we have some information from Finbis. All right, let's go ahead and take a look at the company itself. Okay, so they actually do semiconductors, as you see, they're in the technology side sector. All right, and right now the technology sector. Let's go ahead and take a look at the groups in this case. All right, let's go ahead and take a look at their sector and see how the technology is doing. All right, so in this case, the technology, it's okay. I mean, these are best to be in, but let's go ahead and take a look at it relatively for a month. So the technology sector is not doing bad. All right, right here, as you see, this stock right now, the book shares, okay, this is the book value. So it's $9.88 per share. So at this point, this stock actually is trading at 35.05, which is not bad because the fair value of this stock is like around $34. All right, and which that's really good if it's trading close to the fair value. Um, so here we got an EPS growth for next year is projected to be 20%. It's not bad. As you see, they don't have much debt. They have little debt, okay? And let's see what else. Um, we got a PEG ratio of 1.69. What does that mean? It's evaluation saying that it is undervalued. So it is really good right now. Anything less than 1.7, it's great. Okay, so let's go ahead and take a look at the financials. Okay, so right here we got FORM. As you see, we got the revenue increasing. However, the net income is kind of interesting. It's like a U shape. You don't want that. You always want it to have a net income increase. But let's go ahead and take a look at the reason why this is happening. All right, so as you see right here, we do have the revenue increasing. So their sales are increasing, okay, throughout this time. Let's keep going. As you see, it keeps increasing. That's a plus. The cost of revenue, of course, it's increasing, and that is because they got a lot of sales, of course, right? The more you sell, the more, it costed you, right? Those products, correct? So here's your gross profit. It is increasing. Great. All right, now let's go ahead and now take a look at their gross profit margin. Okay, so we can see how much margin are they actually making, okay, throughout time. So let's go to operating performance, okay, since we were in the gross profit section. So right here, gross margin, it looks like they have a consistency, and actually they're making much more money. As you see, it's growing from 39 to 40% to 41%. So they're consistently increasing. So that's really good. All right. Right here, let's go back to financials again. And that was just the side of revenue. We're trying to find out revenue. It was good, but now we're trying to find out why the net income looks like a U shape, and it should be increasing just like here. Not as much as revenue, but still increasing. So let's go ahead and take a look over here. The net income, you're going to find it over here. Okay, so the net income right here, as you see, net income available for common stocks. And right here, we got it where it's actually, it went from negative. That's okay. So they were negative they were probably starting up back then. All right. They were like big negative, and little by little, they were actually being less and less negative. And right here, actually started going up. Okay. And then in this year, actually it went down and then went back up again. And this is the reason why you see that U shape, okay? So now it was doing good. Okay, now let's go ahead and find out why was there a, why this happened. So let's take a look at it. All right, and right here, Okay, we got on this year, we got the gross profit fine, the operating costs, how much it costs them to actually operate. Okay, so right here you got income, like other incomes, expenses, operating expenses, such as probably interest rates and things like that. This is right here provision for income taxes. Okay, so right here on this year, this is fine. This is provision for income taxes usually means that they're saying that most likely they're going to be charged for like 1.29 million dollars. Okay, and they're actually setting themselves up for for that for the taxes at the end of the year. So they're saying, hey, most likely this is how much the IRS is going to charge us. Okay, but let's go ahead and take a look in here. So right here it was 40, but look, here was 104. And it wasn't necessarily because of the sales. It actually, the reason why it became 104 and not like around 40 or 50, it was because, or 50, because look, or something 40 or 50, somewhere in there. And that is because they had actually a credit of 70.11. So right here, instead of them actually paying the IRS, the IRS paid them or something along those lines. The same thing happened here. Okay, you see that? All right. As you see right here, the IRS is actually they gotta pay the IRS, and here they had to pay the IRS as well. So right here is going back to growing again. But this right here, the reason why it had a big jump, and that's why there is a U shape and not little by little increasing, it's because of the IRS here. Okay, and if we actually look on this year, there was also something with the IRS that they actually got a credit. Okay. So let's go ahead and take a look at the SEC filing. Whenever you have questions, you always want to take a look at the SEC filing. And in the SEC filing actually says right here that they actually it says we generated net income of 78.5 million on 2020, compared to the net income of 39 on 2019 and the net income of 104 million on 2018. The increase of net income on 2020 compared to 2019 was primarily due to an increase in revenue and leverage on operating expenses, which only marginally increased on significantly higher operating levels, as well as decrease in provision for income tax. So here is your word, provision. So as well as decrease in provision of income taxes due to a lower effective tax rate in 2020. So the decrease in the net income of fiscal year of 2020 compared to the fiscal year to 2018, so here's what we're looking for, was primarily due to a 75.8 million income tax benefit recognized in fiscal year of 2018 related to the release of valuation allowance against certain U.S. deferred tax assets and the increase of provision for income tax due to recognition of deferred expense. So right here, 2018, here, all right. So there was a recognition from the IRS to them. So that's the reason why there is an increase compared to everything else. Otherwise, if we actually remove the 70, okay, so 70 minus 104, this would have been probably like in the 30s, somewhere in there. Probably like around 30. So, I mean, it will be less than what it was done this year. However, it wasn't like that bad. It would have been like in the 35s or something along those lines. So at this point, I can consider that this is actually growing as well. It's going up as well. All right. So that's what this one said. Now let's go ahead and take a look at the balance sheet. It looks like this company, their assets has been growing. However, the debt, it has been kind of maintained, but it's very small compared to the assets. Okay, so that's not bad. It has low debt. Right here, you can see it. Their debt is like $69 million. All right, and their assets is like 963 million, almost a billion. So that's great. All right, now let's go ahead and take a look at the cash flow. The cash flow, you always want to look at it because that's the real money. Sales are sales, but some people may pay you, some people may not. Some customer may pay you, some customers may not. But this cash flow is the money that actually the company it is receiving. So as you see, the cash flow is actually going up. All right, and they are actually as far as investing, it looks like they're buying, okay, they're buying stuff. They could be buying, in this case, purchasing equipment, things like that, okay? And they're also financing here, and they're negative. And that's usually because they're either buying back shares, or they're actually, um, or they're or they're actually paying off their loan. So right here, as we can see right here, so the cash flow is actually going up, as you see, it's steadily going up. So that's great. And now here, as far as investing, they're, as you see, they're actually purchasing assets. So they're buying assets. Okay, and that's really good for the company. And as you see right here, if you actually go over here and go to balance sheet, you can see it right here that they're being purchasing assets. So right here it tells you, because the red, it means investing in the company is going down. So that makes sense. So they've been buying assets. So that's great for the company. And let's go back over here. So that's cash flow, that's fine. But here, so they're purchasing equipment, properties. So right here, purchase of property. So they're purchasing properties. Purchase, sales. It says purchase acquisition. So they bought a business. Right here, you can see that they bought a business on this. Right here, they spent like $228 million. Um, what else have they done? They have actually purchased investments. So they have probably bought some sort of, oh, that was back then, sorry. Right here, we can see it better, right? So anyways, right here, they're still doing the same thing. Sorry about the years. But anyways, so they're purchasing, purchasing properties, or equipment, plants. It right here says plant and equipment. So it could be any of those. They are also purchasing, purchase of investments. Okay, so right here it could be securities, it could be anything. If you want to go more in detail, you can see it right here. So you can look up and see what have what have they used that money for. um so they have also sale of investments. So they have purchased, but they have also sold some investments right here. As you see, you can actually take a look at it in here. If you, let's go to the top, and then we come back to the bottom and we can see it. Let's see. Financials, usually it's risk factors, property. It's always good to take a look at the risk factors, financial statements, and here. So an amendment. Okay, right here. So this is liability, assets. So we're going to go into cash flow. All right, so here is the cash flow. So access, obsolete, and actually if you keep scrolling down, then it will tell you about what have they bought. So cash flow from investing. So they have acquisition, plants and equipment. There you go. Now here, proceeds from sales, acquisition of business, cash and cash acquired, purchase of marketable securities. So this is what they've been buying. You see that? So they have been buying securities. They have also sold securities based on the statement. Okay. So proceeds from issuance of the stocks. So right here it looks like they have actually sold some stocks, but it's not that much. It's only like 10. What is this? This is made on, what is this, thousands or millions? Probably millions, probably thousands, in thousands right here. So they have made like 10,000, $10 million worth of, they sold worth of stocks. That's not bad. All right, so they have also payments on term loans. So they have also paid off some loans and so on. All right, so that's what we got as far as their financials. So it looks like their financials are doing well. All right, as you can see, their revenue is going up. Now we understand why the income is kind of fluctuating, but it was because of those um, IRS IRS what was the word that they gave, they're in different brackets, so they got that back. So in this case, We got the cash flow is also doing good. Um, so financials wise, it looks very well. Okay. It says here that the price currently at $35 is actually close to its fair value. And now let's go ahead and take a look at it as far as technical. Okay, so based on this stock, if you take a look at it, it's kind of, so throughout the past 5 years, it looks like this might be a potential bottom. All right, and it's close to the fair value. All right, so we got all this much money that it could go to. It has been consolidating. All right, so the first so let's go ahead. The first thing, let's go ahead and see if there's any price manipulation. All right, so as of right now, okay, the stock, let me remove this out. So the first thing, it could be that if as of right now, the stock could be doing this, okay, could be actually, this is the bottom, right? The stock actually could go here, okay, could go all the way up to here. However, I believe that it could go all the way up to here to meet up with the 50 moving average. Then most likely it could come back down, and if it comes back down, the price manipulation, what they're going to do, they're trying to make it go even lower than this previous swing low. All right, so if I get in now and it actually does that, I am not going to panic. I'm just going to let it be. Okay, if it actually doesn't happen and it keeps going, great, why not? But if it actually comes lower, like around probably 31.88, if that happens, I wouldn't mind, because I'm right here. I'm going to buy it tomorrow. So I do have the chance that it could go all the way up to here, 35, and actually come back down and do that, and then try to go up, or it can go straight up to 37 and try to do that, come back down. So do I see more upside than downside? Yes, I do see it. The stock price is actually, the fair value is actually $34, 34.25. And right now it's trading at 35.05. So it's a great buy right now. As you see, the stock price actually, if we take a look over here, uh, the book value is $9.88 per share. So if the company tomorrow happens to actually go bankrupt, then at that point you will receive $9.80, which is not bad. I mean, if we actually compare Tesla to it, okay, for example, if Tesla tomorrow was to actually go bankrupt, you will only get $23 out of it. So this company is not doing bad. This one right here. Okay, so now let's go. That's price manipulation. So again, what are the possibilities of this happening? So what it could happen right here is the fact that, as you see, it's consolidating like this, right? This is your bottom. So right now I'm going to get in right here tomorrow, right? So you may touch the top, come back down and push it down a little bit more, and then finally go up. So if that is the case, I'm not going to panic. Anything all the way up to $32, I'm not going to panic. Anything if it goes to 30, then at that point, again, if it goes to 30, then I'm going to panic. But if it goes to 32, I'm not going to panic. So I'm happy with it. So now let's go ahead and take a look at, that's price manipulation. Now let's go ahead and take a look at the 50 moving average. Now, in this case, it's my indicators, technical analysis, right? So as far as technical analysis for this past year, as you see, this is definitely the bottom. Whether it's price manipulation or regular technical analysis, this is my bottom. All right, so as of right now, I see that we're going into a sideways stock. Okay, this is just a consolidation. Okay, so my price target would be, the first one would be this one, 35.64. Then it will be $37. Okay, most likely I feel that it's going to retrace, come back down a little bit, and then try to push up. So this company itself is good for long-term investment. Okay, so I'm going to keep it. I'm not going to swing it. Okay, I'm going to keep it for a little bit. All right. Then the next one is going to be $39, and then the next one is 42, and at that point it will be 52 or maybe more. Okay. Let's see what else. And that, now let's go ahead and take a look at options. Okay, so this stock here, it looks like it's been consolidating, and when it runs, it runs. So I feel that if there is like a nice candle tomorrow showing like it's gonna start running, then at that point I will definitely do an options. And what I will do on this one is that I will buy a call, okay, tomorrow, for example, and I will buy this call 20 August, okay. And what will happen is that I will probably buy this call right here, 30, close to the where I'm trading at right now. So it's a 380. So let's go ahead and take a look at it. All right. So if in fact, if I buy this gold tomorrow, for example, okay, and the stock price has a potential to go all the way up to $50 if I wanted to, okay, if I wanted to stay that long. All right. So that right there, we're talking about 50, what did I say right now? $50. So this right here will give me all the way up to a profit. I'm going to invest $380 and I could make about $1,137, okay? If I buy two of those, most likely, I mean, I will not wait until 50. I will probably leave at 46, somewhere in there. So I'm looking into investing about $700 somewhere in there and making about $1,500 somewhere along those lines throughout time. All right. So, and then what I will do is that once I'm close to 46, okay, I'm probably going to go ahead and sell the call, okay. So in that way I could get premium, okay, for that following Friday, for that following, well, depends, right? Let's say that let's say that I am on close like a week before. Let's say I'm on here. That's August 20th. So that's where it's gonna close. So it's on Monday. So on Monday, what I'm gonna do, I'm gonna sell a call. If I'm trading at 45, for example, I'm gonna sell a call at $50. Okay. So in that way, I get a premium, or actually I will not sell it at 50. I will sell it at $55. I will actually sell it here. So thinking that it's going to touch the top and then come back down. So I'm going to sell it for 55 and hoping that it expires worthless. And at that point, I will actually, again, the idea is that once it's August, okay, 16th, wherever I'm trading at, I'm going to try to put it above the resistance, to sell it above the resistance, get that premium, so in that way it expires worthless, and then on Friday cash out my, or actually, yeah, on Friday I will cash out my call also. So in that way, if I get, let's say, if I've invested 380 per call, probably I will get maybe 100 per call if I do that. And I can see it right here. So if you can see it right here, probably I will get like 80 cents, because right now it's talking about these prices. But once we're up there, these prices are going to open up. So most likely it will be like 80 cents or so. So that is my plan. And again, as of right now, we got a stock that currently it's fair value. The intrinsic value is actually $34, and we got it actually trading at $35 on some change. So this is a plus. The financials, okay, the financial statements are great, are good. Let's not say great, because it's great at other stuff. So financial statements, all of them are looking good. And then at this point, the technical analysis, okay, it's actually at a bottom, or close to a bottom, close. All right, and as far as option goes, okay, I'm gonna buy a $35 call. That will be about $3.80, hopefully by tomorrow still. And then I'm gonna, once I'm up there, okay, once I'm up there, I'm gonna sell. Once I'm like at 40 something, I'm gonna sell a call above the resistance. Okay. I can't about the resistance. Anyways, all right. So again, technical analysis were at bottom. As far as technical analysis, also, I could see a potential price manipulation. Okay, so here is for price manipulation. I could see a potential going to $32. If that is the case, I don't mind. If it goes to $30, then I will be concerned. But meanwhile, I will not. And that's it. Right now, we have actually um, analyzed the company through their fundamental analysis, technical analysis, price manipulation, and we have used options. All right. Well, thank you for being here with ODI Trading. You guys have a great day.